Hello traders, you're welcome to this video and you're welcome back to the Forex Geek channel. In this video, we are going to be discussing the Polynomial Regression Channel Indicator. This is a custom indicator, so if you do not have the indicator already, you'll need to download it from an external source. Ensure that you download it from a reputable website. The indicator is available for free, so you won't need to pay any amount of money to get it. And after downloading it, you would have to add the indicator to your indicators library for your MetaTrader platform. So I'm just going to be adding the indicator to the chart right away because I have already downloaded the indicator. All right. So this is how the indicator looks like, the Polynomial Regression Channel Indicator. Now this indicator is a versatile indicator for identifying dynamic trend channels in Forex trading. Okay. Unlike traditional channel indicators, this indicator it seamlessly flows with the trend direction and market volatility. All right, and because of that, it makes the indicator to be a flexible choice for traders. Okay, the indicator can actually help you to identify potential price reversal zones, as you can see on the chart. The lines are serving as dynamic support and resistance levels on the chart. So when you load this indicator to the chart, ideally you should expect to trade in the direction of the trend. And even if you want to trade pullbacks, you can go ahead and trade pullbacks, but do that with caution. For example, when you have the trend identified, because the indicator is going to identify the trend for you automatically depending on the slope, right? When the indicator is sloping upwards, automatically it means it's a bullish trend. When the indicator is sloping downwards, automatically it means it's a bearish trend, right? So once the trend has been identified and you see price has begun to bounce from the lower channel to the upper channel, back and forth, look for a good opportunity confirmed by candlestick patterns. All right, and you can also use other indicators to confirm your entries. For example, because this trend has been identified as a bullish trend already, when the price is bouncing off, it could be the middle channel, it could be the lower channel. All right, either of them. When you have the price bouncing off the middle channel, perhaps it's crossed below it a little or above it a little. Once you have a bullish candlestick pattern form, it can be your cue to enter a buy. So in this case, we had a bullish engulfing. So we'd have considered entering a buy around here, setting our stop loss below this low, below the pattern. And our take profit obviously is going to be at the upper boundary of the channel. Okay, so it's quite an easy strategy to use, right? Once you have identified the trend, very easy steps. The first step is to identify the trend. The second step is to wait for the price to bounce off either the middle band or the middle line or the lower line for a buy trade or for a buy trend. In the case of a sell trend, either it bouncing off the middle line, right? In case of a sell trend, either it is bouncing off the middle line or it's bouncing off the upper line. Okay, then you look for a bearish candlestick pattern to confirm your entry, and then you exit when the price gets to the lower boundary, that is for a sell. All right, okay. Now when you want to confirm signals, in addition to using candlestick patterns, I'll recommend that you also use other indicators. For example, you can use the relative strength index as a confirmation tool. All right, so basically if you are using the RSI, for example, when you have price bouncing off, for example in this case we had price bouncing off the lower channel and we had a doji. Remember that a doji is a reversal candlestick pattern. So we had a doji around there. It was a sign to enter a buy. And then around that point, we can see that the RSI was already pointing upwards. It was close to the oversold territory, although it was not inside the oversold territory, but it was close to it. And you can see that the RSI was pointing upward. It's already began to trend upward. So this was a confirmation for this buy. Okay, having seen this, you can proceed to enter a buy trade, and you set your stop loss below the swing low. And for your take profit, you can either set it at the middle line or the upper line. But one thing with dynamic trend lines or dynamic support and resistance zones are the support level and the resistance level are changing, right? For example, that's the reason why you have to be watching, right? You have to, at intervals, at least you should come and watch what the price is doing, right? Because you might not be sure if the price is going to arrive at this resistance here or here or here. So if you end up setting your take profit here and the price arrives at the resistance here, you would have missed some profit. If you set your take profit farther away and the price arrived at the resistance before then, you might end up seeing your winning trade turn back into a losing trade if you have a reversal, or you might give back some of your profits to the market. So it's ideal that even when you set your stop loss at a dynamic resistance point, that you keep watch of the price action, so you will know the exact time price gets to that resistance, so that if your take profit has not been hit but price has already gotten to the resistance, you can then exit your trade manually. Okay, the reverse is the case for the sell. For a sell, when the price gets to the support zone and it has not gotten to your profit yet, your take profit yet, but price has gotten to the support zone, then you shouldn't wait for your take profit to be hit. For the fact that it has gotten to the support zone already, you should exit your sell trade. All right, so basically that is it, right? So in terms of risk management, always make sure that you are trading with an amount that you can afford to lose. Okay, it's very important. Do not risk more than 2% of your capital in one trade. All right, and make sure you use good risk to reward ratios. All right, if you are risking $1, your potential profit should be a minimum of $2. Okay, that's a risk to reward ratio of 1 to 2. All right, and then in addition to that, make sure that you do not over leverage. Okay, calculate your lot sizes appropriately, right? When you want to enter a trade, make sure that you have already calculated your potential profit and your potential loss even before you enter that trade. Okay, it is very important. All right, so that is it for this video. I hope you found this video insightful. If you did, kindly like the video and subscribe to the channel if you have not done that already. And don't forget to hit the notification bell so that you do not miss out on more trading videos like this. Furthermore, share this video with those who you feel are also going to find the video insightful. And if you have used this indicator before, kindly share your experience in the comment section so that we can know how the indicator worked for you. All right. In the meantime, thank you for watching, and I hope to see you in the next video. Happy trading.